S&P 500 is one of the most important charts in the world of trading and investing, and for that reason, the charts for the S&P 500 can act as a great macro indicator for general trend direction. Are the markets likelier to go up or down? On July 3rd, before we entered the 3-day 4th of July weekend, the SPDR S&P 500 index and or the SPY, one of the most heavily traded ticker symbols in the markets, did something very, very significant. And I want to talk about the potential ramifications of the breakout that we're going to be discussing today. My name is Royce Jacob, and welcome back to the channel. If you go on to gain value from this video, give it a like, drop a comment. What do you think the SPY is likelier to do in the short term? And of course, over the course of the video, we will talk about a few different scenarios, both bullish. Clearly, I lean bullish, but there is always the possibility that things flip bearish and this turns out to be a bull trap. Okay, so we are going to spend the far majority of the time here today on the charts, but I want to begin by talking a little macro, just kind of reflect on what's going on in the markets. And to do that, I'm just going to read over a few points that I touched on in the newsletter on the day that the S&P 500 broke above this line of resistance that we're going to be talking about. Okay, so just setting the stage, waves of Independence Day optimism have succeeded in pushing the SPY and NASDAQ to new all-time highs, and the SPY has managed to close the day and week above a very significant line of long-term resistance. This is a massive event for the bulls if the bears don't end up trapping them and or us. Because as you know, if you're part of the Waves portfolio, you would know that we are positioned very, very heavily bullish right now, okay? Don't like when that happens, but that's okay. And then I touched on here the Fear and Greed Index. If you've been, obviously if you're a member of the portfolio group and if you receive these newsletters, but even if you've watched recent videos, you would know that this is a very, very generalized indicator that I tend to use pretty often, especially when we're in these polarized areas. Okay, so by polarized areas, I mean either extreme greed or extreme fear. Whenever we are in the territory of extreme greed, which is 75 plus, it doesn't necessarily mean that things are guaranteed to, the party's going to stop. It doesn't guarantee that a correction is imminent, but it just makes me put up my guard a little bit more. And that's what I said right here, okay? So by no means does this guarantee that the rally will come to a screeching halt, but in my mind, it definitely gives us reason to act with a bit more caution. The S&P 500 and NASDAQ will always have an effect on macro sentiment, but with the way the Russ 2000 small cap index and Bitcoin have been performing, I believe we could be entering a cyclical shift in our favor, and by that I just mean the portfolio. The Waves portfolio is full of small to mid caps, and I think that investors will continue to put their capital work within these sectors, and I am stoked to see what our plays can do over the remainder of the month. Okay, so again, this video is about the S&P 500. I will be making a members exclusive YouTube video, Waves plays, as many of you know, going over all of those exciting names: Bitcoin miners, AI plays, some other plays, specifically in genomics that I have my eye on right now. So if you want to watch that video, then you can hit the join button below this video. But if you want to join the portfolio group, if you want to become an official member of Waves Capital and receive a full breakdown of my entire portfolio, receive these daily trade alerts and trade analysis, portfolio analysis newsletters, that's the first link in the description of the video, or I'll drop a pinned comment with this too. You can join the team. It is my complete portfolio, daily trade alerts, email newsletters. I do swing trade options. I have a lot of long-term positions in there that are obviously you have access to, but as far as the day-to-day, week-to-week goes, I'm pretty much only active on a day-to-day basis in my options portfolio. So if you aren't familiar with options, then definitely go do some research before signing up for this. If you're invested for the long term, then again, my full portfolio is already in there. But if you want to learn options, I do have a simple and effective guide to trading those too. But anyway, if you just want the portfolio breakdown, again, if you want my daily trade alerts, that is going to be $15 a month, $40 for every 3 months. That's completely up to you. But, give it a shot. If you don't like it, you can always just cancel. But I'm proud to say that that is a pretty rare occurrence. And, June was an amazing month. So hopefully July just keeps those waves coming. Again, the link to sign up, the link to become a member is in the description or in the pinned comments. Welcome to the team if you join. If not, no worries at all. I hope you gain some value from this video. So again, the S&P 500. For those of you who don't know, the S&P 500 is pretty much just an index of the 500 leading companies within the US. And for that reason, it can act as just, in my opinion, this is the most important single index, arguably one of the most important charts of all trading or of all specifically macro analysis. And although I'm not personally trading the SPY or the SPXL, I don't usually trade indices. I'm a stock picker. I trade specific stocks. And again, as I just read out, I guess, specifically small to mid cap stocks. And again, swing trade options on those stocks. It doesn't mean that the SPY isn't important. Okay. What's good for the SPY? If the SPY is healthy, it typically results in a healthier market environment. Now, again, IWM small caps, I do think are going to start surpassing, the student's going to start surpassing the master. The underdogs are going to start outperforming the mega caps, which are the S&P 500 and the NASDAQ. But still, if the S&P 500 is healthy, if the king is healthy, the kingdom is happy. Okay, that's kind of the easiest, most basic analogy I could think of. Okay, so that being said, the S&P 500, as you can see in front of us, has broken and closed above this line of absolute long-term resistance. Okay, I'll be making a pretty comprehensive video about this trend line soon. I already made a members trader tips video about it, but conservative resistance on the lower side, absolute resistance on the higher side using only those singular candle wick touch points. So a breakout of conservative resistance gives you reason to be bullish. A breakout from absolute resistance or the absolute trend line in play is incredibly bullish. And not only did we close the day above there, we closed a week above there as well. If we go to weekly candles real quick, again, close the week above there. Weekly, we're going to get to RSI on daily because that's important. But weekly RSI, nowhere near overbought levels yet. So this is definitely going to be a medium to long-term indicator that I'm going to keep my eye on. If we start to get to those overbought levels on weekly RSI, which is where my cursor is hovering now, which constitute 80, 85 plus, that would mean that I'm definitely looking to take profits probably from every position within my portfolio. Okay, so that said, we are quickly approaching, we're going to go day and then 4 hour. We are quickly approaching those overbought levels that I just mentioned, these dashed lines right here. These are the blue dashed lines at the top where my cursor is. That signifies overbought territory in RSI. And again, similar to the fear and greed index, this doesn't guarantee that we're going to, it doesn't guarantee a correction. It doesn't guarantee a reversal because at the end of the day, momentum will always matter more than anything. But as a trader, it's, in my opinion, at least, it would be irresponsible to not, alter your portfolio and adjust your risk profile or the risk profile of your portfolio. Once we start getting to these overbought levels, which we're quickly approaching, if we see another day or two of green in the SPY, so whenever you guys are watching this Monday, Tuesday, even through the mid-July, this is definitely important. Okay, so I'm keeping a close eye on that. 4 hour is even more exaggerated. So you can see 4 hour, we close the week. It looks almost like an exact continuation of that dash right there. But we close the week, at least as far as 4 hour RSI is concerned, technically just on the cusp of overbought territory on RSI. So when it comes to the short term, I do think that a few things are very likely to me. One thing is incredibly likely to me, and that's the fact that at some point, probably in the week ahead, we are going to see a pullback of around 0.5% to retest this line of absolute broken absolute long-term resistance as new short-term support. Many of you know that this is one of my favorite technical trading patterns in the game, is those broken levels of resistance acting as new levels of support. So over the next couple of weeks, I'll be making a comprehensive video about that as well. So stay tuned for that. And again, subscribe to the channel if you're not. So, if you do join, if you do subscribe, thanks. But I'm excited to make those trendline videos because that's something I've been wanting to do for a while. Anyway, again, I think it's very, very likely that at some point in the week ahead, at the very least, we come down to retest this line of broken long-term resistance. Would result in about a 0.5% correction. You can see here that we were in an ascending channel, broke above this. You could almost call this a retest, but I really don't like that. That said, or it's not a super convincing retest, but again, the way that this little sell-off, this single 4-hour candle sell-off was immediately eaten back up with buy orders, just really speaks to the overall momentum and the fact that investors in general are wanting to put their capital to work, okay? So overall, the trend is objectively bullish. This is a very, very bullish event. Again, especially considering that weekly RSI, or I'm sorry, the weekly candle closed above this level. And again, weekly RSI is nowhere near overbought territory yet. So to round this up, I do think we get a short-term correction, a very subtle short-term correction. But all in all, when it comes to the remainder of the month of July, unless there is some significant gray swan event, which I called them, like, unless we get some crazy tariff news, unless something, unforeseen happens as far as geopolitics are concerned, as long as nothing crazy happens, we are currently in blue sky territory. And that's really, really exciting for not just the S&P 500, but for all U.S. equities in the markets overall. So I'm excited to see what waves the month of July has in store for us. I'm excited to keep riding all of the gains that we've seen over the month of June and even to kick off the month of July. And again, I'm excited to ride these waves with you guys. If you want a complete breakdown of the portfolio, and again, my daily trade alerts and portfolio analysis newsletters just like this, right below is the full breakdown of my portfolio. I'm not going to share that out of respect for existing members. But again, if you want access to all of this and all the archives of these newsletters, it's the first link in the description or in the pinned comment of the video. Thank you for watching. Again, I hope you gained some value, and I'll catch you next time. Until then, always remember, take action, make waves. Peace.